Well, again, hello everybody, and thank you so much for taking the time to be on the webinar this evening. I'm super excited to be able to go over the Southwest Florida new construction opportunities with all of you folks. Florida has been an amazing market for us, and it's shown a lot of growth and development, especially over the last few years. So I'm going to be covering a brief intro of the company, and then you're going to be hearing from two of our amazing Florida agents, Jerry Robinson and Greg Ring, who I'm going to be introducing shortly. So we've established some really great relationships with builders in Florida, in the Florida market, and are going to be able to provide many new construction opportunities to our investors. Jerry and Greg are going to be able to cover that in more detail, but it is definitely a huge benefit for us to be able to offer these to our clients, as they work very well for investments and have shown a lot of promise to the folks that have moved forward with them. So to introduce myself, my name is Vince Tomich, and I'm an advisor here at Marshall Reddick. I work out of the Newport Beach office in California, and my primary role as an advisor is to learn as much as I can about each individual investor and to help guide you through the process to achieve your investment goals. So there are many steps in the home buying process, and I'm here to assist from our first call all the way until post-closing. There are a number of team members from our agents, our lenders, our property management team, and I can help make all of those connections and field any questions along the way. So a little bit more about myself. I was born and raised here in Southern California, and I have been in the real estate industry for over 7 years now. I am an investment property owner, and definitely plan on continuing to grow my portfolio. It's just something I definitely like to reflect on things that I've done, as I definitely like to practice what I preach, and it just becomes really helpful when I'm talking to folks that whether you're new or you've purchased many properties, to be able to relate and work with team members like myself and others on our team who actually buy investments and do this for their own personal in their own personal life as well. So, and before getting into this role, I had a background in residential lending, and that was a really critical part of my career and really helped me understand financing and how, using leverage could really help advance your speed and how you grow your portfolio. So we're going to be, we have definitely resources and the folks to help with that. And then our calculators definitely show both ways, whether you're buying cash or using financing, and we'll get into that, as we get into the presentation. So I see that some of you may have, attended webinars in the past, but for those of you that are new with our company, I like to just take a moment to explain who Marshall Reddick is and what we do. Marshall Reddick is a full service real estate firm, and we basically focus on 4 primary services. We have our real estate brokerage, where we help people buy and sell, whether it's their primary or investment purchase. We also do property management. So 99% of the folks that are going to buy an investment property are going to need property management services. That, being from marketing the property, rent collection, rent disbursement, any kind of maintenance issues, fielding tenants, all of the tax information. At the end of the year, we go ahead and provide that and send it to you so you can give it to your CPA. So essentially everything you would need from an owner's standpoint. And then our third service is private money lending. So we actually have 2 clients that fit into this service. We have our borrowers, and then we have our lenders. So a good example of a borrower would be somebody who is doing like a fix and flip on a home, right? Someone who needs hard money or private money that's short term, where they're going to buy the home, renovate it, and whether it's sell or refinance out, they have that kind of short term financing. We also have another example of a borrower would be somebody who uses self-directed retirement accounts. So whether it's a self-directed IRA or a solo 401k, and you want to acquire a property, you need what's called non-recourse financing, which is what private lending offers. That's how you would be able to, use leverage and buy a new piece of property. So that's another good example of our borrowers. And on the flip side to that, we have lenders. So the same way one of you folks who would want to buy a property we have the opportunity to invest in mortgages. So instead of collecting a rent check, you would collect a mortgage payment. So you are the bank, and it's secured by a first position lien. So definitely we have our collateral to protect our lenders. And our fourth service kind of piggybacks off private lending, but it's basically our investment fund. So what the investment fund is basically a pooled fund of lenders who have decided to put money with us, and instead of putting your money into one direct loan, we now have a fund where the fund is invested in 50, 60, 100 different loans. So your risk is spread, you get a quarterly distribution, and you can keep the money working as long as you want, as opposed to being subject to the turn times of whatever that particular loan is. You now can keep the money in as a minimum of 12 months, and you can keep it in as long as you want, and you can allow those funds to grow compound, have compound interest. So that's a really cool new space that we're in that's been working out really well for a lot of investors as well. And ultimately my goal is to make the process of investing as seamless as possible by educating and introducing all the key players that work with us to make this happen. So just quickly before we turn it over to our Florida team, I just want to cover our markets. So we are in 16 different markets across the country. What you'll see here is there's a green box kind of highlighting some of the markets that we actually have a physical presence in. This means Marshall Reddick office with Marshall Reddick agents and Marshall Reddick property management. So that is something where we really rely on our local teams to help assist with a lot of these acquisitions. So it's not me from Newport Beach helping you buy in Florida. We have our teammates there, boots on the ground, who have local experience and can kind of give that invaluable insight to what's going on within that these hyper specific communities. But today we are going to be focusing on the Southwest Florida market. But the cities that are not highlighted, these are areas that we can make have assistance in. Although they won't be Marshall Reddick agents or property management, we do have a close referral network that we can assist with. So now, as you saw that list of markets, one may ask why these markets. So we've taken the time to vet out specific markets that we want to focus on. Ultimately, I think we can all agree on that not every market across the U.S. is going to be a good market to invest in. But we've put together some key criteria that we feel support a strong market. And that is going to be a strong job market, low vacancy rate, housing affordability, landlord friendly, strong education. So these are all things that we feel are very valuable. Now, with that said, I would like to turn it over to our teammates in Florida, Jerry and Greg. I believe Jerry's going to start us off. So Jerry, take it away.
Hey, thanks a lot, Vince. So yeah, Jerry here. I've got Greg sitting here with me. Little bit about me. I'll let Greg introduce himself before we kind of move through the rest of the presentation here tonight. So I'm a licensed Florida realtor in Southwest Florida. I've lived in the area since 1997. Became a licensed realtor back in 2015, excuse me. I started in real estate back in 2009 on the investment real estate side through apartments and things like that. In 2018, I actually got my broker's license here. Wanted to kind of continue my education that way, and I also wanted to become an instructor. So that was one of the prerequisites to becoming an instructor here. It gave me an opportunity to really network with a lot of brand new shiny agents that were coming to our market and kind of help to influence what they learned and how that process went. My focus has always been on multifamily and commercial real estate. Pretty much anything that has been on the investment real estate side has been where I've grown my business. And then we have Greg here. I'll let Greg introduce himself.
Hi there, thanks a lot. My name's Greg Ring. I also am a licensed Florida realtor. I bring to the table a lot of local area expert, that I am an expert. Also, I do enjoy nature quite a bit, and I am somewhat of a prodigy of Jerry's. I was one of those who was headhunted and brought onto the team and mentored underneath Jerry for multiple
like 4 years now.
Yeah.
4 years now. Good deal. Mhm. All right, so this is kind of the big question of the night, right? Is new construction as a investment vehicle. As Vince said earlier, one of the big things that we've done here is we've built a lot of relationships with builders in the area. These relationships have allowed us to kind of keep an influx of these properties, and with the amount that we do, it helps to work with the pricing on them. So Southwest Florida in itself, when it comes to new construction, since about 2000 or 2011, we have been pretty steady when it comes to the building side. I'll explain that in a couple of slides. But right after the market dropped here, things started picking back up. 2011, 2012, a lot of builders, specifically spec builders, came into the area and started building just kind of as we go along. Appreciation in the area for properties over the last 2 months has been about 30%. And one of the unique things to us here is something that we've seen kind of happen over the years, especially the pandemic years, 2019 through now. Usually on new construction, we had seen a massive gap between resale properties and new construction. The catch is that so many people came to Southwest Florida during the pandemic that builders had a very difficult time staying up with the amount of demand on the new construction side, and that helped to elevate resale properties in the area. We're still seeing a pretty intense match between the two of them. The seller confidence on new construction and the need for people to have a house now versus 4, 6, 8 months down the road is what helped to kind of raise that value up. New construction has always had a lot of benefits when it comes to the investment side. Those include the maintenance cost on properties that are new tends to be a lot less for the first 3 to 5 years. You don't run into a lot of the surprise things that have been hidden. So no absorb costs, no issues with the future repairs, or even having to go through the process of renovating. There was a period of time, as in every ebb and flow of a market, where you would see people being able to buy properties dirt cheap and renovate them and kind of move on that way. And that has, over the last couple of years especially, kind of gone away. So now it's a situation where, because resale and new construction have been so close, when you add in having to renovate these properties, it increases and actually puts the resale properties over the cost of that, and being able to recoup that on the other side becomes difficult. New construction tends to hold its value a little bit better, right? 20-year difference in a property, even without with the renovation side and things like that, it's still a 20-year-old property. And so it becomes more difficult to sell when other things are out there. We've actually found this, and we're going to talk about a certain builder tonight, but even within their models, if a 4 to 5 year difference of the exact same home, it has always been easier to rent out the brand new, never lived in at a higher rate. Even though it's the exact same property, the rental rates tend to remain higher on a new construction than they do on the other side. And it's easier to maintain the renters. They're not walking into a property that may have some hidden repairs or things like that, right? So you see less turnover on those. And again, like I said, the resale value, and you usually see a higher appreciation, right? 10, 20, 30-year difference in the year of a property can change how much that property is going to be worth in the future. Couple things you should know about the area. These are kind of big hot topic items that we'll usually cover when we are sitting down with a client one-on-one, just so they can understand what this area is and what is potential here. So because of the growth that we have seen over the last 10 to 12 years, we have kind of moved from a lot of building in the South Cape area. It's pretty much full up at this point, very limited land, and the land values have become very high in the South Cape, right? As people kind of migrated to, especially Cape Coral, everyone wanted to be next to the water, and it grew out past that. Skip ahead now to 2010 and on, there's been a ton of growth through North Cape. It's where land was readily available, and it was easier to kind of fill up there first. For a long time, it was these properties, there was no necessity for well and septic systems, or excuse me, for city water and sewer, primarily because well and septic was enough and they weren't worried about the drainage table coming down too far and people being out of water. As the growth has come through the North Cape, the city has found it more and more necessary to start phasing in a city water and city sewer plan to help meet the needs of all of the growing construction that's coming in that area. So if you're looking at the map here, the North 1 East and North 1 West, both of those have been completed. And they're going to be kind of moving westward initially, and then they'll move up through the Northeast, and then they'll hit the Northwest at that point, kind of the furthest reaches of Cape Coral at this point. Their timeline right now is usually they're doing a phase every 24 to 36 months. Some are running a little bit longer, just depending on what's going on and necessary materials to kind of complete an entire section at one time. So what this means is, and some of the things, some of the properties we're going to look at later in this is we're going to talk about the difference between well and septic properties versus city assessments paid. There's a dollar for dollar increase on assessments paid properties. That assessment can look at about a $25,000 difference between well and septic, and assessment properties. So it's one thing to always keep in mind, right? Is that especially if you're looking at it from a cash flow standpoint, you can potentially cut down some of the cash flow if you're looking at that. We happen to have builders that actually build in both. And some of them are far enough out, depending on your investment strategy, whether it's a long-term buy and hold or 3 to 5 years, you may not hit that area and it may work out just fine. We'll talk more about those as we go through. And like I said, the growth in the North Cape has been huge. So South Cape, you have the Cape Coral Parkway, and kind of moving in that way has been the big commercial corridor for a long time in Cape. Over the last 3 to 5 years, they've actually started developing Pine Island Road, or US 78, which is pretty much the main cut through between North and South Cape Coral. Now, they're bringing these commercial buildings in so that those that are in the North Cape do not have to travel so far south in order to get, whether it's shopping, cars, executive suites for working, medical buildings, all of these things are building up here. And so that's the way that we are seeing the growth is coming up through the north, and the corridor is just a way that they don't have to travel so far to get it. Most, I'd say probably close to 80% of Pine Island has actually already been built up, with some larger stores, department stores, and executive suites still going in as it travels Pine Island Road. Just an idea so you guys kind of know what we are talking about here. Cape Coral is going to be the main focus of tonight. The builder that we're going to be discussing tonight or showcasing tonight actually builds through Cape Coral and Lehigh, Cape Coral being in yellow at the northern part of the map there. And you'll see that there's 2 red lines that cut through Cape Coral. Pretty much most of what we're seeing right now is from that first line about midway through heading north is where most of these builds are going to take place in the Cape Coral market. In Lehigh, they build as well, and there's a bit of a variation on price between the two, but Lehigh's a little bit of a different market than what we'll see in Cape Coral. The other area that we're going to be discussing tonight is in Charlotte County, which is actually directly northwest of us, and it will include the areas of Punta Gorda and Port Charlotte. There's some benefits, pros and cons to each side of it. So we're going to kind of cover what the differences between those 2 markets are and why it's so important that we're building in both Cape Coral and Port Charlotte, Punta Gorda. So like I said, there's some differences between the two, kind of laid out down here, just where we see some major differences, I guess, between the two areas when it comes to an investing standpoint. The first is millage rate, or pretty much what you are going to be looking at from a property tax situation in each of the different counties. So Lee County right now has a millage rate of 14.219 is what it is currently. As of August, it was actually much higher. They have come in, and because a lot of resale properties sold for over market prices for the last couple of years, the tax rate in August that they had actually originally sent out was at 17.449 millage, which is almost a 1.8%. I know some people look at it as a percentage versus a millage rate. So figure the property taxes were about a 1.8. 1.4, 1.42 is where they are in Lee County right now. They felt that it was an unfair tax actually on the values that were out there, and kind of set themselves up to bring it down. So as of September 1st, they actually moved that rate down to 1.4 from 1.8. Charlotte County runs in at a solid 1% or 10 millage rate. And so now we're going to see kind of where the difference and why we have differences in prices on the property. Doesn't have a whole lot to do necessarily on the rent side, as it does land values in the areas are much different. So current lot prices in Lee County, there's a variation usually between 50 to 100K for a standard lot in Cape Coral especially. But even as you move further out from Fort Myers, Lehigh, things like that, where land values in Charlotte County are still resting between 25 and 50, and you can even find them a little less depending on the areas that you go. Average property values in Lee County right now run in at about 430. Remember, that's the average, right? In Charlotte County, average prices are about 369. Cape Coral, because it is still very much a growing city, appreciation tends to be a bit higher, especially in the Northern Cape. Rates right now have been between the 4 to 7. You have to kind of take out or average out at least the last of the pandemic years, primarily just because everybody moved to Southwest Florida all at once, and that's not the norm for us. It's a little bit lower up in Charlotte County. We're sitting at about 3 to 5%. In Cape Coral especially, but even throughout Lehigh Acres and other areas, we're only about 65% improved land as it sits right now, which means we still got about 35% of unused land that's going to be grown up over however long it takes to fill that up. Port Charlotte, Punta Gorda, using that market, they're a little bit closer to, 78%. The average age of the residents in Lee County is 48.2, with 59.5 being the average age in Charlotte. And one of the big things to kind of bring up on that side of it, if you look just at the bottom real quick, it'll say the 44% improved land is rentals. We have a lower age group in there, so we see a lot more rentals down in the Cape Coral area. A lot of your residents are older in Charlotte County, so we see less need for the rental side. The rental properties that we currently manage up there stay rented. There's no issue on that side. There's just less of them at this point. Average rental rates, and this is an average of everything between 1 to 4 bedroom homes in Lee County. The average going rate right now is $2,400 a month on single family. Multifamily is a little less. I think multifamily right now sits at like 1936 is the last one I looked at. Charlotte County, you're a little bit lower as an average on the single family home. It's about 2,200, and it's about 18. I want to say it was like 18 when I looked at it for the multifamily side of rentals in that area. There is, and this was actually an error on the side that I made. So in Lee County, we actually see a lower turnover rate than we see in Charlotte County. You have a lot of demographics up there because they're older. They get set in where they're going to be, and that's where they stay for a longer period of time. So those are just some of the variations that you'll see. And obviously, if you guys have any questions, you feel free to reach out to us. We'll be more than happy to kind of talk about this in a little bit more detail. All right, so this is always a big question, right? Why invest in Southwest Florida? So we are surrounded by water on every side. And from about 3:15 to 3:30 every day, it falls from the sky. Literally every day through rainy season, you get this nice shower that kind of comes down. It cools everything off for the evening, right? And then taxes. Our tax rates and kind of where we sit tend to be lower than other, especially other metropolitan areas that have a heavy focus on rentals. Our tax rates, one of the biggest things that personally I hear from clients when they're coming down here is the difference in taxes from where they are coming with their 1031s or where they've pulled their properties out, they've sold them and moving to this area. That was one of the big deciding factors for them. So definitely lower taxes. Florida has always been a very landlord-friendly state, and what this means is in the event that an eviction has to take place, the average eviction in Florida will run between 18 to 33 days. Really just kind of depends on the judge at that point, but they move very, very quickly in comparison to some of the other markets that are out there. Real estate market's always been strong here. It's only strengthened since the pandemic has kind of come about. And we're not really seeing any drop. We really figured with the rate hikes and everything that we would start to see real estate slow down in our market. But the truth is most of the agents I work with and most of the things that I'm doing right now have only picked up through this time. So job diversity is also another really big reason to come here. So the kind of the staple of our job market down here has always been medical, teaching, or within the school system. Construction has always been really, really strong here, especially in Cape Coral where it's a younger city. But even as you go further out, there's a lot of builders that are in this area. Those three have been kind of the big part of it, as well as tourism or hospitality industries have done very, very well down here. That kind of made up the biggest shot of it up until about 2 years ago. And so what we're finding now, especially with the renters that we work with and the people that we have, is a lot of people, due to being able to work remotely, have started to move to Florida. They get to be a part of all of the nice things, right? They get to be next to the water. They have the lower taxes, all of these other things that are out here. The other thing that they get to do is they get to work remotely. They get to work from home. So we have tenants of ours that are tenants with us, but they're still working for a company in New York or California or one of these other heavy metropolitan areas. They're keeping their same income, which is what's allowed our rental rates and everything to continue to climb. But they've kept the same income moving forward. They've kind of filled up here. For the locals that are here, what that's meant for us is not necessarily they have to move to somewhere that's less, but they have kind of expanded through. So they're hitting the Fort Myers market, or they're hitting the Lehigh market, Sarasota, some of the other surrounding areas. They've moved to as this has happened. There we go. So our unemployment rate right now is we're at 2.4%. Forbes has listed us as the third fastest area for job growth in the nation. Also, I think we're third in the nation for entrepreneurs beginning businesses in this area. Like I said, medical, construction, teaching, and hospitality have always been our big ones. Tech is starting to come in and working remotely for finance companies and things like that. Our median income right now, just under 62.5. We have, and this is more kind of a nudge for us, but so we've got 47 miles of Gulf beaches through Southwest Florida. And we run, especially in Cape Coral, about 400 miles of canals. These canals were kind of designed so everyone could have at least a little sliver of waterfront property. if they could not be on the water directly. Teaching, like I said, one of the big things here, just in Lee County alone, we have 109 public, private, and charter schools. So a lot of schools. One of the other nice things with us is that we're school choice, meaning that you don't just go to the school that's closest to you, you get to choose your school. This has allowed the schools to be rather competitive in their grades and having A+ and A schools versus being on the other side of that. So the robust activity that we're talking about, I've mentioned it before, but pretty much as people have migrated to Florida, I don't necessarily think that we grew faster, not because these people are saying, hey, I want to get out of where I'm at and just move to Florida. I think their intention was always to move to Florida. With the pandemic and everything else, it's just brought them here much quicker. So with that, our population has grown very, very quickly, which means especially because we start so many new businesses in the area, there's a lot of jobs that are allowing people to kind of continue as they come in. We're a very business-friendly county in Lee County. Charlotte is as well. And this has been true of us for a long time now, is that we have such a demand on the investment side, not from the purchase of investment properties, but rentals as a whole shot, that being able to stay up with that or keep that supply in has been very tricky, right? What that means to an investor is that having somebody that's going to rent your property at a premium rate versus having a lot of competition for that same model or that same build is rare. It's not uncommon for our leasing team to face having 4, 5, 6 applications and being able to cherry pick a tenant, versus it being something where you want to take wherever you can get because you don't want a place to stay vacant for longer than 30 days, right? Lee County in itself sees about 1.3 million annual visitors each and every year, who bring in about 1.2 billion to our economy here. Huge shot. People like to vacation here. All right, so job growth rate. Right now we're at about 6.2 from job growth. The labor force is only growing by about 1.6 annually. What this means is there's more jobs than workers to currently fill them. And this is one of the nicest things, especially when you're dealing with a tenant base, is in the event that they lose a job, they're sick, there's a downsize, whatever the case, it's usually pretty easy to go out and just find another job without skipping a beat. I've been here since 97, started working in 99, and I've left some jobs and been in a new one by the end of the day. So it's always kind of been the case here. The GDP of Southwest Florida right now is about 50 billion. And that, because of the increase in population and everyone that's here, it's grown about 35% over the last 10 years. Like I said, third best place for jobs in the US, right? Very easy to find work here. And again, the unemployment rate is relatively low. We're at 2.4%. And, all right, so you've heard me talk a lot about Lee County and Central, even though we've got Charlotte County in here as well. Cape Coral is kind of the central hub of Southwest Florida, right? It's the youngest city that we have in the area. We started late 50s, early 60s is when Cape Coral started to kind of be what it is now, right? Back when you could fly over the Cape and you wanted to pick your lot, they dropped bags of flour on their land to pick where they wanted to be along the coast. So because we're relatively young here, we're also centrally located pretty much between Naples and Venice, which encompasses your Southwest Florida hub. Our population in Cape Coral right now is at 209,576 as of 2022. That means that we have grown since 2000. The census report then showed that we were at 199,000 people, which means we've seen a double in population over the last 20 years. The Cape Coral metropolitan area, which would include Cape Coral, Fort Myers, is one of the nation's job growth leaders, because we're so easy to start jobs and because hospitality is a really big thing. And even companies that are coming into our market, newer tech companies that are coming in and setting up headquarters here, we've seen a very, very steady job growth over the years. And then from a land mass perspective, Cape Coral is at 120, I think it's 122 square miles, which makes it the third largest city in Florida, and leaves us with a lot of opportunity for new construction builds that are coming into the area now. So the typical, the ZHVI, which is the Zillow Home Values Index, shows the homes in Southwest Florida. The average is about 428,000 on homes sold in the area. In the last, over the past year, we've seen a 46.3, I think it's about 18 months now, but a 46.3 increase in value. Sale to list price ratio, 100%. All properties that are pretty much all properties that go into the MLS that are priced reasonably. There are some properties that seller confidence has created an unreal expectation of the property. But pretty much if it's priced competitively, it sells. We still see the bidding on some properties, especially for resale. New construction, a little bit different, right? If it's being built, you select it, you have it, you're not fighting over contracts on things like that. Lehigh, over the last 10 years, has actually seen a massive amount of appreciation, coming in at about 94%, which means these properties have almost doubled in value in the last 10 years. And appreciation in itself, Lehigh is actually in the top 10% of properties, or of areas for appreciation. All right, so we talked about one of the best places to start a business. We've talked about the weather, the economic opportunities in the area. Entertainment options is always a big one, especially if you're a fan of the outside. I actually just closed a property with a client of mine who's lived in Chicago for the last 30 years. And I don't think he's stayed longer than, the time it's taken him to sleep in his home. The rest of it he spends outside. His big focus was being able to live that Florida lifestyle, right? Southwest Florida is pretty much centrally located between our largest metropolitan areas, which is Orlando, Tampa, and Miami. It's about 3 hours to get to any of them in any direction, but it puts us in a really, really nice spot from being able to travel or go to, people come to Florida for Disney or Universal or Miami Beach, any of those things. We don't have a state personal income tax here, and that's always a plus. We have no corporate franchise tax on capital stocks. There's no state level property tax. You will have city, I say city, but city and county taxes, but you have no state level. There's no taxes on business inventories, and there's no sales tax for manufacturing machinery and equipment for those that are bringing businesses to the area. And so we were talking about the ZHVI, the Zillow Home Value Indexes. So we talked about Cape at 437, which is about a 43.3 increase over the last year. Fort Myers is about 391, which still gives us a 41% increase. And Lehigh Acres right now is at a 40.1 increase over the past year. So that's your home values, how they've grown. What also comes with that is the increases in rental rates. Resale property has driven a lot of that. New construction just makes it a bit easier, right? That's a more accurate representation of what actual market value is. But the need to be into a place or move into a property has driven those price values. All right, so we talked earlier, there's 44% of homes are rentals, average here. We've seen an average population growth over the last 20 years of 5.6% each and every year. Average vacancy rate in single family homes is about 1.6%. It's about 3% in multifamily, just because you see a little bit more moving on that side when you have a lot of doors in a smaller area. our rental group is really, really wide, right? So we're everywhere from 33,000 up to 100,000 is the average, depending on which, I guess, hyper local market you're going to be a part of. And then, so rental rates vary right now, anywhere between 1,350 to 2,700 is the average. Some of the larger single family homes, as you get into the 5 or 6 bedroom houses that are out there, we actually just rented it was a 4-bedroom, 3-bath, right on a canal. That one rented for 3,700 a month. So there's definitely some range in that. If you are considering investing in the Southwest Florida market, it's always a great idea to kind of talk to one of us as to where your rental rate should be, based on a certain area or a certain market. Right? You'll see variations in little places. So always a good thing to have that conversation ahead of time. Just some of the demographics for the area here. The average household size is 4. I actually think it's 4.2, but I haven't figured out how they come up with a 0.2 person yet. The median age is 48.8 years currently. And the fastest growing age range for us is 25 to 34. That's a huge stat to consider when you're looking at investment properties. Usually between that age range, you're not looking at buying a house, right? If houses are higher price, you're not at that income level yet where you're doing that. The fastest declining that we're seeing in this area right now is 65 and older. And so what we're seeing a lot of is those people that are 65, 70, kind of moving up through that range, are moving into assisted living, or they're having family move in with them. Heaven forbid they pass away, and the family absorbs that property, right? So that's where it's been bringing our median age down. I think as of 2000, excuse me, I want to say that the median age here was like 61. And it's just brought down past that point. We also, because we see that younger age range, one of the reasons why we have so many schools in the area. Back in '97 when I was here, there were 3 high schools that I could choose from. Now we're at like 13 different high schools that I could go to if I was, still that young. Our average rental increase right now is about 3.7%. It's been higher over the last couple of years, primarily just because of the shift in the market. And the most requested property mix that we tend to find from our renters has almost always been a 3-bedroom, 2-bath, regardless if it's a single family home and or a multi-family home, so duplexes, things like that. That number is very, very quickly changing. One of the things that I mentioned earlier about that remote working is that a lot of people like to convert that additional room, so either 3 with a den or even a 4-bedroom, in order to have an office that they're able to work in from home. So their desk is not next to their bed in their bedroom, right? But yeah, so that's the big change that we're seeing here. We're seeing a lot of need for that 4-bedroom, 2-bath. And then the most requested upgrades that we usually see for properties, or things that people are looking for the most, garages are always going to be a big one here. A lot of people have their toys, or it's additional storage. A fenced-in backyard, always a big one. It's Florida, we got gators. Pools are always a benefit in single family, a little bit harder as you get into the multifamily, but they do they help on that side. And then being pet friendly is another big one. Everyone here, because it's an outdoor lifestyle that a lot of people want to live here, they like having their dogs, their cats, their animals that will travel with them. So yeah, those are the big ones for us. All right, so new construction in Southwest Florida. So between August 2020 and July 2021, waiting for the newest report to kind of come out, but these are the top builders in our area. Lennar, who builds a lot of communities, they're usually not a non-subdivision builder. They build a few, but it's just not their bread and butter. They're usually building the large gated community areas, built out 2,910 properties within that time frame. The builder that we're actually going to be showcasing tonight is D.R. Horton. D.R. Horton in that time frame put out just under 2,300 homes, and they're probably going to be fairly close to that this year. D.R. Horton builds both properties in subdivisions, have whole subdivisions that they've actually created, as well as spec homes in the non-subdivision side or the non-planned communities. Pulte Homes is another builder in the area, but you can see there's a big gap as you kind of leave Lennar and D.R. Horton. Pulte comes in at about 1487. They do smaller master plan communities. Brooks and Freund, they do a lot of commercial building in the area and larger multifamily setups. And then JHS or Christopher Allen Builders kind of rounds out the top 5 with 603 properties that were built within that time frame. The one that, like I said, we are going to focus on tonight is going to be D.R. Horton and kind of the builds that they have right now. They've really stepped up their game in their finishes and kind of what they're putting out, and with the rents are where they are and where they're building in all of these markets, it's made a fantastic vehicle for those that are looking for investment properties in Southwest Florida. They're also very easy to maintain, which is always a big one too. The easier it is to kind of maintain at that point from either a landlord standpoint or a tenant standpoint, the longer that property goes without any maintenance issues, any problems, or anything like that. And with that, I'm actually going to turn over the mic to Greg here. He's going to go over just some of the models, some of the models that most of the investors in the area pick and choose within our markets here within Cape Coral and then Port Charlotte as well as going over some cash sheets, kind of what to expect when you're looking at these properties. One misnomer to kind of talk about here is these cash sheets show in as a cash. There's a lot of different financing options that are in there. So these look as cash purchases at this point, but we can always discuss what it looks like. And I think we have an example in here of a finance based on an average an average down payment, average interest rates that we're seeing right now. So just so you guys kind of have that in the back of your head, you'll see it as cash. We can always talk deeper into that if you guys have any questions on the builder or what it would look like from finance side. You could also check out our website and kind of play with the different numbers based on your specific need. And so with that, yeah, I am going to bring Greg on and let him talk about the models in Cape Coral and Port Charlotte. Enjoy, everyone.
Awesome. Thanks so much, Jerry. Just to start out here, we're taking a look again at D.R. Horton's builder products, some that we have found that are working great for our investors here in the Southwest Florida market. Some of those are going to be the Aria. We have a Cali model and a Cairn model. So moving right along here, again, D.R. Horton, we're looking at the Aria model here. This is a 3-2 with a 2-car garage. These list starting at $358,000 with a range to $394,000. It's important to take notice of those ranges and remember previous in the presentation from Jerry making mention of some of these properties will be connected to city water and sewer, and the others will be connected to well and septic. So those price points are going to reflect the assessments on the property. And again, those are the assessment is in the form of a low interest, essentially a loan that's attached to the tax bill and it's paid over time. So again, this is the Aria model. We're looking at nearly 1,700 square feet here, which is a good number for our tenants. We find that probably we like to stay around anything above 1,300 square feet is a good match for a rental property. So again, we're taking a look at the ARIA properties, and this is going to be your cash flow sheet, or the information regarding a cash purchase for one of the ARIA models here in Cape Coral. This particular sheet is going to be highlighting the fact that it is a well and septic home. So again, at some point, this property will face the assessments being attached to the property. Again, that's attached as a low interest payment paid over time, and that money is actually added value to the property. So we're looking here, we're going to see a list price at $368,000 for this particular model, $368,999, and it will, if you look down on the second line under the list price, we're going to see the initial repair costs. We have this kind of blanketed across on this presentation at about $1,500. Again, this is a new construction property, so initial repair costs should be pretty minimal. What we find is that we sometimes will add in towel bars or ceiling fans in the bedrooms or living spaces to make the spaces more enjoyable for the tenants. Moving along with this property also, we have these rental rates listed in the range of $2,300 to $2,500. Again, this is a range. It will depend on the location of the property, much like all of real estate, location, location, location. Again, it's a 3-bedroom, 2-bathroom home with a 2-car garage. This was for the cash purchase, and I'm going to move on. The next slide here is going to show our only example of a financed example here. Again, speaking, Jerry did mention that when it comes to these, everybody's deal is different, so financing terms is kind of difficult to put a broad umbrella over, especially for a presentation like this. But we're highlighting here a down payment of 30% down. So that puts you just over 11,000. And highlighted down here, we're going to see our monthly incomes with a finance purchase of about $93 per month. Now, when we're looking at the ARIA as a cash purchase with rental rates, we're looking at an annual income more along the lines of about 18,000. So again, that is the cash flow sheet for the ARIA, and this particular property will be on a well and septic here in Cape Coral. Moving along, we're going to take a look at the Cali model next, and the Cali model is going to be a 4-bedroom, 2-bathroom home, again with a 2-car garage. These list price start in the 364 range and can range as high as 404,000. This particular floor plan is going to be 18,000 square feet thereabouts under air. And again, you're going to see your gross rental rates in the range of about $2,300 to $2,500, depending on the location of the property. To highlight this property with a cash flow sheet to better understand what we're looking at here. The list price of this well and septic, again, this property is going to be on well and septic in the Cape, Northwest Cape. The list price is $380,999. Again, the initial repair cost $1,500. Now on this, we're seeing gross rents listed at $29,940. Take away fixed expenses, we're looking at an annual income of about $19,576. Again, this is the Cali model on well and septic in Northwest Cape Coral. It's going to be a 4-bedroom, 2-bathroom model with a 2-car garage, just over 1,800 square feet. As Jerry mentioned previously, the most common models that we do see here in Cape Coral are going to be 3-bedroom, 2-bathroom homes. But things are moving more towards people wanting to have that extra bedroom. So this is an example of a 4-bedroom option here in Northwest Cape Coral. So we're looking at D.R. Horton's Cairn model here. This is going to be another 4-bedroom, 2-bathroom, 2-car garage model. The price range here is $389 to $424. With some more square footage under air, we're looking just over 2,000 square feet. And with that extra square footage, we're also looking at some increased gross rents. We're seeing gross rents for these models in the range of $2,495, so just under $2,500, all the way up to $2,700. Again, this is a range, and the rents obviously are going to depend on location somewhat. And yeah, so moving along to the cash flow sheet for this one, the Cairn model again, this one is going to be in the Southeast Cape Coral. So when we move down into the Southeast Cape Coral, this is where we're going to see the properties and infrastructure are actually mostly in place. And so this property will be connected to the sewer and city water. So highlighted at the top of the screen on the address line, you see assessment paid. That's helpful when you are looking at our website, marshallreddick.com, and browsing the properties on your own. This particular Cairn model is listed at $391,990. There's that initial repair cost again. That's going to get you your ceiling fans in the property, maybe the towel bars, just minor things that would be needed just to make the tenant more comfortable and bring the property up to what we call rent ready. Okay. Again, speaking about the rental rates, we were in $2,500 to a $2,700 range. And so with gross rents, that's going to give you approximately $30,600. And that would net you an annual income of just over $20,000 at $20,847. Again, this is the Cairn model, D.R. Horton. This is an example of an assessments paid property. So this property, when completed, will be connected to city well and sewer, and you will not have to worry about future assessments being brought to this property. So speaking more with Southwest Florida and D.R. Horton properties, we also are going to have availabilities in the Port Charlotte and Punta Gorda markets. And some of the models that we find are working really well up in that area are, again, we're going to see the Cali come back into play. We've got Freeport models, Boardwalk, and the Denton floor plan in the Port Charlotte and Punta Gorda markets. Again, these are just a short hop, skip, and a jump away from Cape Coral, so it's a viable option. As we take a look here at the D.R. Horton Boardwalk model, this is a 3-bedroom, 2-bathroom home, and it does have the 2-car garage. And right away, I'm sure you're noticing the price point on this particular model is going to be $329,990. It's quite a little bit of a difference from the Cape Coral market. Again, all those differences were highlighted from by Jerry previously. Another thing to notice here is that this particular model is going to be on the smaller side at 1,389 square feet under air. It's a good size and it works well with our tenants. So while it is on the smaller side, it's a great option. And again, we're taking a look here. This is the Boardwalk model, and the gross rents on these properties we're seeing, again, up in the Port Charlotte and Punta Gorda markets, which is Southwest Florida, just north of Cape Coral. We see gross rents in the range of $1,900 to $2,100. Again, those will vary based on location or more precise location. And to take a look here, we're taking a look at the Boardwalk model cash sheet that you could also take a look at on your own time on the Marshall Reddick website, www.marshallreddick.com. This will be the boardwalk model, and it's located in Port Charlotte. It's going to be connected to public water. However, this unit, this property is actually going to be connected to a septic system in Port Charlotte. So again, taking a look at the numbers here, jumping right out at you is that list price at $329,990. Again, it all comes down to location. It's a viable market in Port Charlotte. It's the speaking against the land values is a major factor in these price points. Is the vacant land at the time of is much more affordable. So here again, we're seeing the initial repair costs, and that is our blanket 1,500. Obviously, that could change just a little bit depending on the needs and prices at time of installing the possible fans and whatever may be needed. So this model is going to be a 3-bedroom, 2-bathroom. It's going to have a 2-car garage as well. I mentioned it is a little bit smaller on the square footage, but it's nearly 1,400 square feet. So we're still able to capture those gross rents of nearly $24,000. And that's going to bring you an annual income of just over $16,000. All right, so here we have the Freeport model, again, DR Horton. This is going to be a 4-bedroom, 2-bathroom, 2-car garage. The starting price points here are $309,900, and we're going to see some more square footage with that. So we're going to $1,499. It's just under 1,500 square feet. Anyways, these gross rents we have listed they're in the range of about $2,000 to $2,200. Again, the rental rates will vary based on the precise location of the property that we do wind up with. Okay, so this particular property here, again, it's in the Charlotte County market. It's just north of Cape Coral. This is going to be public water and sewer. Again, you're going to see the list price is $309,000, and that's very attractive for a 4-bedroom house anywhere in Southwest Florida, if you ask me. And again, so as far as the gross rents on this particular property, we're going to see gross rents around $24,000 with an annual income just over $16,000. Here's the Cali model. We have seen this before. It's available also in the Cape Coral market. This is going to be a 4-bedroom, 2-bathroom, 2-car garage property. We're going to see these starting in the Charlotte County market in the $344,990 range. Again, this is a 4-bedroom home, and you're going to see with that more square footage. We're looking at about 1828 under air. And with that square footage is what we like to see, higher gross rents. These gross rents up in the Charlotte market are going to be in the range $2,400 to $2,500. Now let's take a look at what that looks like on one of our cash flow sheets. So again, list price here is $344,990, and our gross rents are going to be just over $29,000 on this particular model. After all said and done with fixed annual expenses, taxes, insurance, and management fees, and this particular property is inside of an HOA, we're looking at annual income of just under $20,000. Again, that's the Cali model, built in Punta Gorda, Florida, Southwest Florida market.
One of the big things to kind of bring up about this, and this because there's both of these properties in the Cape Coral market as well as the Punta Gorda, Port Charlotte area, is these currently list in Cape Coral between that 380 to 404 mark. Just as an average based on, whether you're well and septic or your assessments paid. This right here is a full public water and sewer, so assessments paid on this one, and you're seeing it at about a $50,000 difference Greg kind of spoke about it for a minute. That comes from the land values. Same exact property. Honestly, the rents are the same as it comes there. You're just looking at it from a lower price point for the same build based on the land. Sorry, I didn't mean to.
Don't be sorry. All right, so back to the floor models here. This is a model we didn't see in the Cape Coral presentation. This is the Denton model. And this again is going to be a 4-bedroom, 2-bathroom, 2-car garage. And it's kind of a behemoth here at 2,300 square feet under air. With that square footage, we're going to see gross rents in the range of about 2,500 to 2,700. Not to sound like a broken record, but location, location, location. So depending on the precise location of your property, we'll really be able to zero in on what rental rates. So this this particular model, the Denton model, again, it's just over 2,300 square feet. It is on public water and sewer. And the list price here is $384,990, I'm sure. We're going to see the initial repair costs. We know what those are for. Our gross rents here are at about $30,000. And after fixed annual expenses, again, folks, this is going to be an example of a cash purchase. So when dealing with a finance purchase, we're also going to be dealing with interest rates and whatnot when we're looking at our final and fixed annual expenses. So the annual income on this particular property is going to net $20,000, just over $20,000 here.
Last thing I kind of wanted to put into this is that there's a kind of a wide range when we look at this. When we're looking at cash flow numbers as a whole shot, and I'm sure Vince can actually attest to this as he's getting ready to take over and kind of close us out here. The one number that you can always play with when looking at investment property is going to be cash flow. Cash flow can be decided through higher down payments, better interest terms, whatever the case may be. It is the one part of all of this that you can decide, right? You can't decide taxes. Insurances are going to be what they are. But depending on the amount of down payment that you put down will change the amount that you can actually realize each and every month. You know, and in an ideal world, everyone would be, you know, putting 5% down and being able to cash flow. The truth is a lot of finance properties at this point, they kind of sit within that 20 to 40. I've worked with clients that have anywhere from a 25% down, and we identify properties even with D.R. Horton that would cash flow. I have others that have gone as high as 65% down because they wanted to realize a certain number and depend on that cash flow each and every month. Cash flow isn't the only deciding factor to look at when you're looking at properties. The appreciation in the area, right? We don't buy stocks for the idea of going, well, we're going to cash out in 3 months, right? It's over a period of time. So the appreciation is always going to be a big one. Principal pay down, what your tenants are going to pay off in the home and put equity back into your pocket. All of these little things that are attached to this will kind of change where your numbers sit. So just something to take into consideration as you move through that. That being said, I want to bring Vince back in here to kind of close us out and talk about a little bit of the like the data packets and some of the other information through Marshall Reddick. So Vince, you there?
Yeah,
Perfect.
I am here. Thank you so much, Jerry and Greg. That was awesome presentation. And yeah, just to piggyback, based on our pro formas, the one thing that we do not factor into our pro formas are rental increases. So our default timeline for a hold is 15 years. So when you are holding a property for 15 years, it is almost a 100% certainty, right? It is 100% certainty that the rents are going to go up. So we don't factor that in. So with that said, our numbers are definitely very conservative when you're looking at the long game in that. So yeah, we can go into more detail more on a one-on-one. I will be doing follow-up calls. So if anybody's interested, we can go through that. As far as what you're seeing here, so we have a data packet. So a lot for the folks that, you know, maybe tuning in and tuning out of this presentation, or the folks that just want to have some raw materials in front of you, we have data packets for each market that we operate in. You can find them on our website at the link below, or also any property that you're looking at on our website. There's a section where that data packet for that specific property or that market will be obtainable. So you can find that, and it's a lot of the kind of points that Jerry and Greg covered today, a lot of demographic features and employers and stats. So for those of you that are interested in that, that is where you can find that. This is a quick indication of just our appreciation trend. So we didn't go into much detail, so I'll quickly cover this here. In the top left-hand corner, you kind of see the trend line, right, of the appreciation trend, which is trending at about 4%, and then the actual median home prices, how those have rose and fell, and then have really rose back up and met that kind of trend line. That big dip there is what you see in 2006, 7, and 8, which is one of the biggest, if not the biggest, real estate crashes of our time. So with that said, obviously you can see quite an impact there, but ultimately what I like to point out is the way that Southwest Florida has completely revved back and got back on track, and it even exceeded kind of what the trend line was there. So that's really promising to see that the rebound of a market like that. With that said, though, you're going to notice a property class designation on all of our properties. It's going to go anywhere from luxury to C class. You're not going to see a D class, but we have the chart here to kind of explain. The way that these numbers are determined is basically off of the home price. So we have what's called an MSA, a metropolitan statistical area, and that's basically a graphed out area on a on the map, and we get our numbers from the National Association of Realtors, where they have a median home price for that designated area. So we mark that median home price as 100% of the value. So for example, in this scenario, a single family residence in the Fort Myers market, the median home price is $360,000. With that said, anything from 100% of that number to 130, we consider an A-class property. So what that means in real numbers is from 360 to 468 is an A-class property. From 360 to 288, B class, 288 to 180, C class. And you can kind of see that trend. There's going to be certain factors that help kind of can maybe push a property over the edge or below the edge, depending on the area and the neighborhood, and just some other features. And we actually have a ebook that goes into more detail of how we actually arrive at this figure, right? And what you'll see right below the single family chart is the chart that is for multifamily. So we just have to break this down on a per unit basis, and it helps give us a better indication of how to maybe rate multifamily properties, as it may be a little bit more challenging being that their price points are higher. And then on the right side of the screen here, you're going to see from 1997 to 2021, just the appreciation kind of year over year. So there's some really big resurgence, ever since 2010. And we've been seeing that year over year for, the last 10 years or so. So, with that, it definitely shows a lot of promise to the Fort Myers area. Quickly, I'm going to cover property management. So basically, we have our property management set up from single families to 30 plus units. So we basically have two fees when you start. There's a leasing fee, that is to place a tenant in the property, and then we have a monthly management fee. So that leasing fee is actually 50%, 50, of the first month's rent, and that goes to pay the leasing agent for their efforts, and all the screening and background checks included to find and place that tenant, right? And then also we have a monthly management fee. So for single family up to 4 units in Florida, it's 8%. As you get from 5 to 15, it starts to trickle down, right? 7, 6, 5. And that's just for the ongoing attention that the property needs, whether that be maintenance, dealing with vacancies, collecting rent, any kind of things that the tenant may need, we would go ahead and handle that on your behalf. So that's how that works. And then for the next year, if they just renew, there's a lease renewal fee of $150. So you're not paying a leasing fee again. The leasing fee is only when a new tenant has to be placed. There's definitely a lot more to cover in property management, but I know we're over a little bit, so I want to respect everyone's time. And like I said, we can cover this on a more one-on-one basis. The property rating scale that I was covering earlier, this is the ebook that I was referencing. This gives you kind of the nuts and bolts of how we come up with these ratings and what to expect from each rating, right? In terms of tenants as well as maintenance and vacancy associated with that property class. Because it's one thing to, on a piece of paper, buy an inexpensive property with high rent and to expect to collect all that cash flow. There's definitely a human element when it comes to renting properties. We're dealing with humans. So therefore, based on these property classes in the neighborhoods, there's certain times that different expectations. You might have scenarios where if it's a C-class property, there may be more maintenance and vacancy that you have to be prepared for. And if you're not, you could get caught off guard thinking you're going to have more cash flow than you actually do. So it's just a good way to better prepare yourself. It doesn't mean that it happens every month or even every year, but it's a good thing to know and understand so that if those things do come up, you're prepared. As I mentioned earlier, I am going to be following up tomorrow and the next day, and I'll be reaching out and just, basically you could call it a consultation call, you could call it a follow-up call, but my goal is to kind of figure out the who, what, when, where, and why, right? Maybe you just signed up for this webinar because you heard about it and you just wanted to get an idea of who we are and what we do. Awesome. At least I can give you our contact or any other maybe tips on other webinars or educational material you might need. Maybe you are more serious about buying and we can talk about why you want to buy. How, right? Do you want to buy with cash, financing? Is it a 1031 and you really have some time frames that you may have to meet? Again, like what I just mentioned, when, right? Are you guys ready to go now? Is it something before the end of the year? Is it in 2 years, right? We can talk about that and figure out what's best for you. What kind of property, right? We covered a lot of single families. We have tons of multifamily opportunities as well. So that's like the 2 and plus units. We also cover, we specifically focused on Southwest Florida, and that's where this that's where this presentation is dedicated to. But, we do operate in all other states and other markets. So if for whatever reason Florida wasn't the fit for you, we can talk about that as well. And then obviously introducing you guys to all the key players. So, you did meet Greg and Jerry on this call. You've met myself, but we also have other teammates, our preferred lender, property management team, and there's a lot of folks, and they'll be introduced, accordingly depending on where we are in this process. So definitely a lot of folks to help. Again, feel free to connect with us on any of the, our online platforms to check our reviews and see what other people are saying if you're interested. And, here's my contact information here. You can take my phone number there, or my email is probably the best way to get me. And we can set up a call. Otherwise, I will be reaching out. And I just want to say thank you all so much for attending. It really means a lot to us. And we hope that we provided some value for you guys and something to think about. And I also want to thank Greg and Jerry again, just for taking their time and having an insider's view on the Florida market and doing so well. So thank you guys all so much. And I hope everybody has a great night.